Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, October 31st, 2022. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Happy Halloween. Here's a look at the daily time frame of the ES. Right now, a little bit of a pullback in after hours and overnight trading. Heading into the RTH Open here, we have a fairly narrow range, 31% of ADR after Friday's big squeeze. That's a big time squeeze, a good higher low off the PIMA trigger zone and a push to new highs. Very solid short-term trend higher. Right now, narrow range. We do have on Wednesday, we have the FOMC statement and another Fed interest rate decision. So we're going to get ourselves another FOMC key level. The last time we got one was here in September 21st. The market dropped away from it, bounced, failed new low, and finally got that level on Friday. So we're going to get ourselves another FOMC key level later this week. That means that we could see mostly range-bound action ahead of that Wednesday afternoon announcement. So we could see a little pullback, maybe a bounce and hold. Perhaps we're trading between 38.50 and 39.50 ahead of that Wednesday range. So again, we could see some volatility later in the week, but early this week could be a bit more range bound. If we take a look here at the NQ, the NQ showing a narrow range as well. You can see right here just 28% of average range, pulling back after Friday's huge squeeze. Friday rallied away from the previous quarter's close, rallied to close back toward the close, the highest closes of the quarter. Or of the range so far for October heading into November. But again, we have a really good rounded bottom and compression here, but we haven't gotten through that resistance. We haven't gotten through the 11.8 level that we've been watching all month. So again, great compression here, a lot of good energy. Above 11.8 could spark a bit more of a squeeze, perhaps back as high as VWAP and the 200-day moving average above. A failure to break out, or perhaps a failed breakout, could be tremendous for another round of weakness ahead within the primary trend. If we take a look here at crude oil, this one's down right now, 1.8%, trading 86. Last week here we had a breakout from this 7-day narrow range, a really good breakout, a whole day. Looked like we were getting a pullback and rally. Today here though, taking it out to the downside and testing the 86s. The 86 level is that key level. That's the breakout level right there. That's the level that bulls want to keep bid for a shot at pushing this thing up. Keep an eye on 87.08, the previous session's low here. To close back above that level would be indicative of an early rejection that could lead to a squeeze back up toward those 94s. So right now, very good 7-day narrow range here with the good breakout, but not seeing much follow through just yet. So keeping an eye on 86s. If we take a look here at gold futures, here's gold. You'll notice with gold here, this one just wasn't able to get above 1680. 1680 is the key level there. Above 1680, you open up 60 more handles of upside into the 1740 zone. At the moment, this thing failed on Friday, still holding down here at the moment. Very close to getting a big test at the 1620. This would be the next area to watch for a fade. If we push through 1620 and see rejection, that could lead us back up to a 1680 retest. So any price below 1620 could open up 60 handles of upside back towards 1680. So watching to see if we get ourselves a rejection here for a fade back up. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck. Trade well, and I'll see you in the trading room. Take care.